Moral hazard and morale hazard often starts with a detail people overlook. Moral hazard versus morale hazard in insurance appears when moral hazard involves intentional behavior after protection exists. A driver with coverage deliberately takes risks because damage feels less costly. Insurance can change incentives. The early sign matters in moral hazard versus morale hazard in insurance because it can change cost, trust, timing, or emotional meaning. That difference matters because insurance can change incentives is often where the pain or cost is felt. Moral hazard and morale hazard becomes clearer in a concrete situation. One ordinary moral hazard versus morale hazard in insurance version is that morale hazard is carelessness rather than deliberate abuse. A homeowner becomes less careful about small leaks because insurance exists. The attitude becomes relaxed even without intent to deceive. The pattern in moral hazard versus morale hazard in insurance is easier to handle when the first signal is noticed instead of dismissed. The situation is easier to judge when the attitude becomes relaxed even without intent to deceive is treated as a likely effect, not a mystery. Moral hazard and morale hazard changes the decision before anyone names it. Consider the moment when the spelling difference matters. Moral points to deliberate choice while morale points to attitude. The terms describe different risk behaviors. The answer in moral hazard versus morale hazard in insurance is usually found in the cause, not in the label people attach afterward. A person who catches this early can respond before the terms describe different risk behaviors becomes harder to reverse. Moral hazard and morale hazard has a cost that appears later. Moral hazard versus morale hazard in insurance becomes clearer when deductibles reduce both hazards. Paying part of a loss keeps the customer financially involved. Shared cost discourages reckless or careless behavior. Once the cause is named in moral hazard versus morale hazard in insurance, the response can fit the situation more closely. For moral hazard versus morale hazard in insurance, the real sequence matters more than the most dramatic detail. Moral hazard and morale hazard depends on timing as much as facts. In moral hazard versus morale hazard in insurance, notice when fraud is an extreme moral hazard. Someone stages a theft or exaggerates damage. The insured is trying to profit from the policy. The link between those pieces is what makes moral hazard versus morale hazard in insurance useful in real life. That difference matters because the insured is trying to profit from the policy is often where the pain or cost is felt. Moral hazard and morale hazard can look simple from outside. A familiar moral hazard versus morale hazard in insurance example is when neglect can create morale hazard claims. A property owner ignores routine maintenance until damage spreads. Insurance is not meant to replace basic care. People often feel pressure around moral hazard versus morale hazard in insurance before they can explain where it came from. The situation is easier to judge when insurance is not meant to replace basic care is treated as a likely effect, not a mystery. Moral hazard and morale hazard creates pressure in ordinary life. In moral hazard versus morale hazard in insurance, the real-world version may be that health insurance can show both issues. A patient may overuse services when someone else pays, while another delays preventive care because coverage feels like a safety net. Behavior shifts when cost feels distant. This is the detail that changes what to check next in moral hazard versus morale hazard in insurance. A person who catches this early can respond before behavior shifts when cost feels distant becomes harder to reverse. Moral hazard and morale hazard is shaped by rules and incentives. It shows up in small moments, such as when business insurance faces moral hazard. A company may take aggressive risks if losses are heavily insured. Risk transfer can weaken caution. Noticing that driver early can keep moral hazard versus morale hazard in insurance from becoming harder to manage. For moral hazard versus morale hazard in insurance, the real sequence matters more than the most dramatic detail. Moral hazard and morale hazard becomes risky when assumptions replace evidence. Look at a case where morale hazard is often subtle. A person stops locking a bike carefully after buying theft coverage. The behavior may not feel dishonest. The headline alone does not show the whole chain behind moral hazard versus morale hazard in insurance. That difference matters because the behavior may not feel dishonest is often where the pain or cost is felt. Moral hazard and morale hazard is easier to handle when the moving parts are visible. A concrete version is when insurers use underwriting to detect hazards. Questions about safety systems, past claims, and maintenance reveal behavior patterns. Pricing depends on more than the object insured. The background force should guide the next decision in moral hazard versus morale hazard in insurance more than the first reaction. The situation is easier to judge when pricing depends on more than the object insured is treated as a likely effect, not a mystery. Moral hazard and morale hazard has both a visible side and a quieter side. In a normal day, policy exclusions limit abuse. Intentional damage is usually excluded. Insurance protects against covered accidents, not planned losses. In moral hazard versus morale hazard in insurance, the clearer reading follows the cause instead of stopping at the visible result. A person who catches this early can respond before insurance protects against covered accidents, not planned losses becomes harder to reverse. Moral hazard and morale hazard can turn small choices into larger consequences. Picture the situation where claims investigation looks for behavior clues. Timelines, photos, police reports, and maintenance records may be reviewed. The insurer checks whether the loss matches the policy story. The moment becomes easier to handle when the moving part is named clearly in moral hazard versus morale hazard in insurance. For moral hazard versus morale hazard in insurance, the real sequence matters more than the most dramatic detail. Moral hazard and morale hazard rewards preparation more than guessing. The clearest version is when customers can reduce morale hazard with routines. Smoke alarms, inspections, safe driving habits, and maintenance logs keep risk low. Care remains necessary after buying coverage. That mechanism explains why the topic affects real choices in moral hazard versus morale hazard in insurance. That difference matters because care remains necessary after buying coverage is often where the pain or cost is felt. Moral hazard and morale hazard can be misunderstood when people focus on one number. In moral hazard versus morale hazard in insurance, someone may notice that moral hazard can exist outside insurance. A bailout may encourage risky financial decisions if losses are expected to be rescued. Protection changes incentives in many systems. Seeing the cause early gives people more room to respond well in moral hazard versus morale hazard in insurance. The situation is easier to judge when protection changes incentives in many systems is treated as a likely effect, not a mystery. Moral hazard and morale hazard affects trust because expectations are involved. Watch what happens when not every claim is suspicious. Having insurance and suffering a loss is normal. Hazard concepts explain risk design, not automatic blame. In moral hazard versus morale hazard in insurance, the visible event can distract from the driver that needs attention. A person who catches this early can respond before hazard concepts explain risk design, not automatic blame becomes harder to reverse. Moral hazard and morale hazard works differently for different people. Moral hazard versus morale hazard in insurance becomes concrete when premium discounts can reward safer behavior. Telematics, alarms, or safety training can reduce pricing in some policies. Insurers use incentives as well as penalties. When moral hazard versus morale hazard in insurance appears in real life, this is the detail to check first. For moral hazard versus morale hazard in insurance, the real sequence matters more than the most dramatic detail. Moral hazard and morale hazard should be checked before money or emotion is committed. For example, language helps in professional conversations. Agents, underwriters, and claims staff may use the terms differently. Knowing the distinction prevents misunderstanding. In moral hazard versus morale hazard in insurance, this is the point where the visible choice and the real pressure start to meet. That difference matters because knowing the distinction prevents misunderstanding is often where the pain or cost is felt. Moral hazard and morale hazard becomes easier to manage when records are clear. In real life, the core issue is changed behavior. Insurance should reduce financial shock without encouraging more losses. Policy design tries to balance protection and responsibility. That is why moral hazard versus morale hazard in insurance should be read through facts rather than a quick assumption. The situation is easier to judge when policy design tries to balance protection and responsibility is treated as a likely effect, not a mystery. Moral hazard and morale hazard requires a specific next step rather than a vague hope. Think about how a good policyholder still acts carefully. Coverage is a backup, not permission to ignore risk. The best outcome is no loss at all. For moral hazard versus morale hazard in insurance, the important move is to notice the chain from first signal to final effect. A person who catches this early can respond before the best outcome is no loss at all becomes harder to reverse. Moral hazard and morale hazard matters because the result is felt in daily life. A simple moral hazard versus morale hazard in insurance case is this. Moral hazard and morale hazard explain why insurance has deductibles, exclusions, inspections, and conditions. The policy is not only a promise to pay, it also sets conditions that keep risk behavior from getting worse. That sequence explains why moral hazard versus morale hazard in insurance can grow even when the first moment looks small. For moral hazard versus morale hazard in insurance, the real sequence matters more than the most dramatic detail.